Hi, welcome to the Market Alert for Tuesday, the 28th of March 2023. So yesterday, market bounced, no surprise really. Bitcoin, bond and big tech and bullion breakdown as banks and black gold bounce. The odds of a rate hike in May inched back above a coin flip today. Yes, like I say, I watched a really interesting video, which I'll leave a link to, about the CBDCs. And this was also mentioned in there as well. It looks like, the more they continue to increase rates, despite inflation continuing to rise, the more damage it's doing to the banks. Well, that's blatantly obvious, but obviously not to the central bankers, unless it's intentional, of course. So bonds tumble as banking prospects improve. You just love the language, don't you, really? And the US stocks were mostly higher and bonds declined amid receding bank sector fears. So maybe the sound and resilience is actually being taken on board from Yellen. But again, it won't be long, will it, before another one appears? This is just the calm before the storm, because global financial risk has risen amid bank turmoil. IMF chief warns the rapid transition from a prolonged period of low interest rates to much higher rates necessary to fight inflation inevitably generates stresses and vulnerabilities. They should have known about this. I mean, even a child of 3 would know that if you hold bonds with a low yield and you increase rates, those bonds are going to decrease in value. It's the basics of economics and market understanding. I mean, it's just bonkers that these people didn't realise this, but there you go. They're the bright ones, not me. Economic news for today. Bailey's going to be out speaking again. Lagarde's going to be out at 2 p.m. And then you've got consumer confidence and the Richmond Manufacturing Index. There's nothing really for the rest of the week. There's Yellen's out on Thursday. That's the only thing that I've seen. And they can wheel her out anytime, can't they? But I'm sure she was out speaking. Yeah, there you go. 8:45 p.m. No, she's not out till late at night. Best time for her, frankly. So yeah. No economic news like CPI or non-farm payrolls or anything. So the market's free to move back to the upside, which it did quite comfortably yesterday. So let's get along and have a look at how the market panned out yesterday, what we could expect today, given the lack of economic news and also that the banks are now fine. Starting off with the Dow Daily. You can see the market moving up strongly yesterday. We traded up to the 78% retracement from here, projected back. The market looks set to move higher again today. It's got to take out that 78, the 200 MA and the 89, and then it's got the high to the left there, which if I just draw this on, you will see the number there. So we're looking at 32768. And like I say, this is all barring another bank coming in with its cap in hand asking for funds. So why would the market fall? We've got a war, recession, or potential recession, rampant inflation, strikes, you name it, we've got it all going on. So the market's free to go up. Now the banking crisis is sorted. And this is what it's been doing, isn't it? You get a bit of a move down. The next crisis becomes the norm, and then the market's free to move back to the upside. And that's exactly what we're seeing here. So yesterday, obviously some sell orders around yesterday in the Dow, but it's settled on the high. As I've said before, the high, the low, the close are really, really important levels. The market comes to the high, they bring it back off the high with buying, as you can see by the green, and then the market just continues to move on throughout the trading session. So let's just have a look, see what we had from the low to high yesterday. Not as much as normal, 350 points, still a good day as far as the markets are concerned. So 350 point range for the Dow. Overnight, the market is sitting above the close or just getting above the close. The high is there for yesterday. That will be a piece of cake. It's only about 70 points, no big deal. I can do that in 1 bar or 2 bars for the Dow once the market opens. As you can see by these bars, the range is quite significant there. So yeah, the market's free to move to the upside. In the German DAX, also at the 78 and also trading above yesterday's high as well already, and the 20 bar moving average. like I say, the market's free because the banking crisis is over, according to Yellen and Co. 15,249 is the next upside target, and then the high over here, which is 15,300. Get through this and we'll start targeting areas to the left like this one. Unless, like I say, there'll have to be some sort of massive selling coming back into the market. But Deutsche Bank yesterday put on one complete euro from 805 to 905, and that's all that was required to move the market back to the upside. The 30-minute chart, again, just have a look at how far the market moved yesterday. We have that sort of 150 points move or range, or 300 points it's been of late. But yesterday, again, 170. So whichever direction the market settles in after a shakeout, which you've gone back to that pattern, we shake out and then we move the market up 170. So if it starts to move in a direction after shakeouts or the market rallying and then moving lower, you will get the sort of 170 point moves, 150 plus. And that's exactly what we saw yesterday. So the market finding support at the close. That's what I say, the high, low, close, very important levels. Market trades up towards the high, runs out of steam, comes back to the 200, goes up, touches the high, and then comes back with the Dow. Bit of selling there as that sell-off happened in the Dow. Obviously, somebody wanted to get rid of some stock, and then the market was brought up, and now we've got a double high for the market to contend with. We're just going through yesterday's high, which is that one, and then we've got Friday's we need to take out as well. But it looks like it's having no struggle whatsoever at the moment in order to do this. On the overnight market, so we'll look at the 5-minute chart with regards to yesterday as well. There we had an initial move to the upside, then we sold off to the close, became oversold, we had a crossover in the stochastic oscillator, and then we made our way back towards the high, because the target will be, depending on where the market is in relation to the DP, if it's above, it will go and target the high or the close, and if it's below the DP, it will target the low, find support, and then move back. It's a pattern that we've seen all the way through. Just go and have a look. So coming back to the high, and then we get a full 100% retracement there with some selling coming into the market, and the momentum dropping off. The market then retraces and then becomes choppy as the Dow tries to make its mind up which direction it wants to go in. But overnight, there you'll see we're already through the high. You see how again how the close was a target, went through the close, then struggle with the high. If it struggles with it, then what they'll do is they'll come back down, retest it, and they'll then move the market up. So it's free to open and scream through the high if it wants to do so. And like I say, the caveat is unless Deutsche Bank opens and starts selling off again, or another bank. But at the moment, if there's no banks coming, as I say, cap in hand asking for funds, then the market is free to move to the upside. Monday's trades, 205 in profit, 255 in the profit factor, and then we've got 60-40, let's just say, or 59-41, whatever. It doesn't really matter. I'm not interested in, as I said before, the win-loss ratio. As long as the profit factor's above 2, and we've got a positive here, which you can see, you just let the profits run when you need to. And then there's a lot of small trades in between as the market traded sideways, and then finishing off with a trade in the afternoon with the trading with the US session there. So yeah, good start to the week. See what the rest brings. Just got to get into a mind that it is free to go up at the moment, and take the long side a bit more confidently. But like I say, the only thing that's going to stop it from going up is the reality check that it not all is well, and that's going to come back, and then the market's going to tank again. But you can see what they're playing at the moment. There's no CPI numbers, no major inflation numbers, and no non-farm payroll numbers, no FOMC meeting minutes. So again, the market's got a bit of a reprieve at the moment. So the only thing that's going to create any sort of downward move, and a sharp one, is going to be another bank coming to the fore asking for cash. In the S&P 500 yesterday, the market's managing to stay above the two averages there, the 5 and the 50, up on the overnight. Needs to take out the 78% retracement and also the high of yesterday. Let's have a look at that. There's the shakeout to begin with. Back to the close. Come off the close with buying. Over sold. Market trading up to the R1. Then put in a retracement all the way back down to the 200 MA and the close with some buying and demand. Oversold. Crossover back up. About 62% retracement there. And then the market seeing profit taking to the close again at the end of the trading session. Market sideways at the moment, needs to get back above yesterday's close and the DP before it can attack the high there. This is an interesting one actually. This one's below the DP, so also watch the low just in case you get a shakeout. See if it finds support there, which you can see is there to the left. In the FTSE 100 yesterday trading through the 62% retracement, piling the points back on the upside, and 78, 89 and the high here is also going to be a bit of an issue for the market moving to the upside there. But Bailey's speaking, no doubt he'll assist the market in pumping prices up there. So yesterday again we see the market selling off at the 200 MA, have a shakeout to the close. We then get a retracement back above the 50, up we go, and we stop at the high. Highs are always a bit of resistance. We went through the high, traded up to the R1. We then pull back to the high and the 20 bar moving average, which you can see there, becoming oversold, and then the market moving up. At the moment we're trying to get back above yesterday's close, and we've got the high just above there, which needs to be taken out. In the currencies, GBPJPY, this trading up nicely yesterday to the 20 bar moving average, and down overnight on the Asian market back through the 62, but above the 5 bar moving average at the moment. In the 30-minute GBPJPY, you can see a nice day yesterday. We've got a 100-point range there. Actually, it's 150, isn't it? 100. It's actually 200 points range there. And again, you'll see we kicked off at the close. The market found support there. Market up to the 200 MA, straight back through the high. Didn't like the high at all, and had to regroup. And then saw the buying coming in here at the 20 bar moving average, and this time drove through. We've got a bit of supply there as we go through the high. Through the R1 and the 200 MA. We also see the market driving through the high, stopping at this level, have a breather, then move. The supply there is an absorption of volume. The market then continues to move to the upside, just creeping. Overnight, we've got some profit taking in the Asian markets. There's the high of yesterday. You've got your close and your DP. And at the moment, the market's struggling with that DP level. So let me just compress this down. We're down below the DP. If we're down below the low, below the DP, then the low always seems to be the one that becomes the focus. If you can hold at the low, you can then bring it back. But if you can drive through the DP, then you've got the close, the high, and the R1 to move through on the upside. In the pound, this is going to be affected by Bailey speaking this morning. And you can see there yesterday also piling on the points on the upside after the dollar was slightly weaker. Through the 78 at the moment, need to take out the 89 and the recent high to the left. A bit of an increase in volume, but we are seeing a bit of a drop off in momentum there in the daily chart. 30-minute chart again, we kicked off at Friday's close, came up to the 200 MA, came back to the close. As a retracement there, we were oversold, so that's fine. And the DP, we drive back through the DP with some buying, and we get stuck at the 200 MA. We have to have a retest of this level. We come back through, and momentum's dropping off, but that doesn't matter because we're making rising lows, and the market continues then to the Friday high, and overnight this has taken this out, as you can see there, up to the R1. And now the market's going to wait to see what Bailey has to say when he speaks this morning. What time was he speaking? Just as a matter of interest, 9:45. So yeah, there's the pound. Let's have a look at the US dollar. So the US dollar showing a bit of weakness there yesterday and continuing this overnight, making a bit of a retracement at the moment towards 62.78 levels there. Again, we'll just have to wait and see what happens. Let's have a quick look at the 30-minute chart to see how it fared during yesterday. You can see there was certainly some weakness around there, and we've actually gapped lower as well in the dollar on the overnight. So actually consolidating a bit at the moment, might try and make a bounce back. We'll just have to wait and see. And finally, in the metals, as I said yesterday, they would hammer the metals to the downside, and that's precisely what they did. But they managed to come back a bit, but overnight, more weakness dominating there at the moment. Back to 50% retracement there for this coming back, 38% at the moment. Yeah, so holding at 38, we did come down to 50 for the silver market. So there you can see it was down from yesterday, taking out the low as well, but you can see how they've managed to bring it back above the low, also above the close, but now it's been crushed again. So watch today's low, likely to be taken out if the dollar gets a bit of strength. But no surprise really, because we're so overbought in this market, is due for a correction. I'm surprised it's not actually been pulled back to this sort of area in the 200 MA, to be honest. But then there's plenty of time to do that, isn't there? In the gold market also, we're pulling back to 89 yesterday, coming off the low before the close, but looking weak overnight as well at the moment. It's left behind a high, hasn't it? Which we can see there, so starting to come back below the DP, below the close. Watch the low if they hammer this to the downside. Yesterday, we took out the low overnight, never got back through. We did try to keep above the 200 MA, and then they just hammered it to the downside. Like I say, they don't want this above the $2,000 an ounce level. The central banks are still buying at the fastest rate that they've ever bought at in history. So if they can manipulate the paper market, they can pick up the spot price of gold a lot cheaper. And finally, the gold-silver ratio has been moving down quite nicely, as you can see there. So silver holding its ground at the moment compared to gold. Like I say, the reasons for hammering the gold is the central banks are still accumulating it. So there we go. That's it for this one. Let's see what the market does today. Like I say, they've got to get above yesterday's high to maintain the move to the upside. Don't be surprised if the market shakes out to the downside like it did yesterday. Find support and then they move it back. And like I say, barring any bank wanting more funds, the market's free to move to the upside. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.